I'm Martin Turenne, President and CEO of FPX Nickel, Vancouver-based company focused on a very large nickel deposit in central BC. So the deposit is called Baptiste. It's actually one of the 5 largest undeveloped nickel deposits in the world. There's about 7 billion pounds of nickel contained in the resource, mostly in the indicated category. Baptiste sits within a larger land package called the Decar Nickel District. We think Decar could ultimately host several very large-scale deposits. We'll talk a little bit about that, but most of the conversation will be focused on Baptiste. We completed a PEA for Baptiste in 2020. Shows this could be one of the largest nickel producers in the world, producing something in the range of 100 million pounds of nickel per annum for over 35 years at a C1 operating cost below $3 US a pound, so within the bottom quartile of the cost curve currently in the nickel business. Interesting mineralogy here that leads to the production of a very high-grade nickel concentrate, around 63% nickel content, which has great applications both in the electric vehicle industry and also in stainless steel. Importantly, and something we'll touch on a little bit, is the potential for very low carbon nickel production, which we think is going to be, a major strategic differentiator for North American nickel supply going forward. The 2020 PEA was predicated on the production of a product for the stainless steel market, but I'd say over the last year and a half, I've become more convinced with each passing month that this nickel will ultimately find its way into the North American electric vehicle battery supply chain. I'm sure you're all aware of the build out of EV battery capacity in North America and the very ambitious targets that the Biden and the Trudeau administrations have for effectively mandating all cars to be EVs within the next 10 to 15 years. That's going to require a bunch of nickel. Most nickel currently comes from places like Russia, China, Indonesia, not probably places where the North American incumbent and new automakers are going to want to place all their eggs or all their bets on. And in fact, in our discussions with very, very large automakers, it's very clear to us in those discussions that those companies will look to position into North American nickel supply, and we think there's an opportunity here for fundamental, strategic alliance between even a company as small as ours with those very large car companies to secure their nickel requirements for their fleets going forward. Decar, as I mentioned, located in central BC, 80 kilometers west of Mount Milligan, 200 kilometers northwest of Blackwater. Both of those projects are large bulk tonnage operations. In the case of Milligan, been in production for many years. In the case of Blackwater, now in early works, they both set a very strong precedent for the permittability of projects here in this region of BC. Important to note that we operate on the unceded traditional territory of the Binche, Wooten, and Clausen First Nations as rights holders there, and those are relationships we take very seriously. Just giving a bit of a satellite view, this is, as I said, really a district scale land package covering 245 square kilometers. In the foreground, you see here the Baptiste deposit. As I said, that's one of the largest undeveloped nickel deposits in the world, and it entirely underpins the PEA and the PFS that we're currently moving into. Last year, we did an initial drill program at the Van target, which is located 6 kilometers north of Baptiste. Now, prospective samples of outcrop there had suggested that Van could host a deposit similar to or potentially even larger than Baptiste and higher in grade. The initial drill holes that we did last year were in the central and the eastern portion of Van, very confirmatory of that thesis. In 2022, we will continue to step out to the west and to the south, and this idea that Van could ultimately host a larger or higher grade deposit than Baptiste is certainly something we're quite excited about, sort of continuing to test this year and in years to come. Now, the nickel mineralization here is relatively unique, so I will get a little bit technical on the style of mineralization. This isn't a sulfide like you might find in Sudbury, and it's not a laterite as you would typically find in places like Indonesia. The nickel is hosted in a mineral called awarenite. That is a nickel-iron alloy. Those are the small silvery white reflective grains that you might be able to see in the image of the core there. Each of those grains is an alloy of nickel and iron, so that mineral is comprised of 75% nickel, 25% iron. That's a very magnetic mineral, and it's one that can be recovered using magnetic separation in a very simple flow sheet. So while there is no existing, awarenite dominant nickel operations anywhere in the world, We think that there's an opportunity here to develop this as a very disruptive new form of nickel supply to the market, something to kind of complement the incumbent sulfide and laterite production. And this is a mineral that actually has significant advantages, both in terms of the metallurgical simplicity and the downstream aspects of it as well. So the flow sheet here is predicated on a very simple basis, comminution to take particle size down to 300 microns, which is a very coarse grind. 2 stages of magnetic separation, recover both the nickel and the iron in the host rock here to a magnetic concentrate. That concentrate is then put through flotation. Flotation separates the iron from the nickel and yields 2 potentially very valuable products. The main product is a very high-grade nickel concentrate. We also produce a magnetite byproduct here. And as we do the PFS, we'll evaluate the opportunity to incorporate byproduct revenue credits from that iron. But for the time being, we'll talk mostly here about that the nickel concentrate. So this mineral, this very unique mineral of awarenite, occurs in a host rock setting that is depleted in sulfur. If there was an appreciable amount of sulfur in the background rock here, the nickel would have formed as a sulfide mineral. The absence of sulfur has allowed for the formation of this very clean nickel mineral that contains no sulfur or other deleterious elements. That allows us to do 2 things. One, it allows us to produce a very high-grade nickel concentrate, around 60 to 65% nickel content. Most nickel sulfide concentrates are in the range of 10 to 15% nickel content. So this is, about 5 times the nickel content compared to those sulfides. The other thing about this concentrate is because of the lack of sulfur in the host rock, there's little in the way of any deleterious or penalty elements, things like arsenic, antimony, mercury, selenium. These are the penalty elements that require typical nickel sulfide concentrates to go through a smelting stage. And if you're a mining company, you don't own your own smelter, in the nickel business, the smelters will bend you over a barrel and you will have to take very punishing payment terms. So the ability to bypass smelting here allows us to yield excessively high payabilities versus typical nickel sulfide concentrates. And as Eric alluded to, that's a fundamental part of understanding how this can be a very high margin deposit. In terms of the applications of this concentrate into the EV battery market, we see that it represents certain significant advantages over sulfides and laterites. So the nickel that goes into a battery is actually nickel in a chemical form, nickel sulfate, or NiSO4. And depending on whether you start with a laterite feedstock, as is shown in the bottom line here, or a sulfide as your primary ore, the journey from the mine to the battery is a very long and torturous one. It typically involves multiple parties with products traveling through multiple countries. So that means higher cost, higher carbon footprint of transport associated with recovering those nickel units into the form of sulfate. The advantage with awarenite is we can, as I said, bypass smelting and go a hydrometallurgical route under very moderate conditions to recover the nickel from the concentrate into solution and then from solution into sulfate. So Elon Musk and other car makers have talked quite publicly about wanting to find clever, innovative ways of reducing the number of stages between the mine to the battery to reduce cost, to reduce the carbon footprint. Now that's easier said than done with sulfides and laterites. If it was so easy to do that, you might imagine that the incumbent producers would already have solved that. It's the novelty of the awarenite mineralization that represents a huge strategic advantage for us. And again, this is where we think this style of nickel mineralization can be very disruptive to the market. Just briefly on the carbon footprint, laterite nickel production, which are the 3 bars here shown on the right, can tend to have a very high carbon footprint, up to 70 tons of CO2 being emitted for every ton of nickel produced. Based on our modeling and due to the fact that we would be on the very low carbon hydroelectric power grid here in British Columbia, which is abundant, low cost, and low carbon, we can be at the other end of that spectrum, around 2.5 tons of CO2 for every ton of nickel produced. And again, when you think about nickel being used for batteries, the end consumer of those cars is going to want to know that nickel came from as clean a source as possible and didn't result in a huge kind of carbon footprint. So again, the strategic advantage here of having a project in BC needs to be emphasized. As I said, we're moving now from a PEA into a preliminary feasibility study. I can't get into a lot of detail here based on time allotment, but we are working through all of the sort of the normal course work, very much putting sort of a major company hat on in terms of the sobriety around the metallurgical test work, the geotechnical work, and all of the work that would feed into environmental assessment here. This sets the path to a credible, sort of benchmarkable path to first nickel production before the end of this decade. And again, that's a common question that comes up in our discussions with those car companies. They'd love to see that nickel sooner, but we are where we are. Before the end of the decade, I think, does conform with a lot of their own growth needs. Quickly here, just in terms of comparing Baptiste to other very large-scale and small-scale nickel projects that are out there in the market that trade either on the Venture Exchange or in London or on the ASX. And you can see that we're in a very kind of favorable part of this curve. You know, the bubble size corresponding to the scale of annual production, the horizontal axis showing the mine life, and the vertical axis showing the where you are on the cost curve. And ideally, you'd love to be in this quadrant of this chart, and that's exactly where we find ourselves. Despite that, given the novelty of the mineralization here, and I think that the only very early stages of an awakening awareness of this project in the market, we traded a very low multiple against our project NAV. So our PEA set out a project NPV in excess of $2 billion Canadian on an after-tax basis. Current market cap around $150 million. So we're trading at about a 0.07 multiple today versus most base metal projects, even in today's relatively sort of modest, junior mining markets, they typically trade at a multiple 2 to 3 times that. So, for people who are willing to roll up their sleeves and kind of understand the technical aspects of this project, I think, as there's a dawning realization of the inherent value here, that's the sort of opportunity to look at the stock right now. Just quickly here on capital structure, 213 million shares outstanding. Very proud to say that management owns about 18.5% of the company. This company's been public since 1996, has never done a rollback or a consolidation of stock. So we've been, I think, very disciplined managers of the capital structure. We've got just about $14 million in the bank today. The last financing was at 65 cents last year, currently trading around 75 cents, fully funded for our activities here in 2022. And the ultimate exit path here, I think, is that this project sits in the hands of a major mining company, potentially in collaboration with an automaker or another downstream participant in that EV battery supply chain. And for us, it's about surfacing as much value for as long as we hold the project.